Welcome to Freema Synergy, the channel where we simplify money, investments, and smart income strategies for people living in the UAE and beyond. If you are an expat, employee, or beginner who wants to understand how money really works, this channel is built for you. Here, we focus on education, discipline, and long-term thinking instead of hype, shortcuts, or risky speculation. Make sure you stay until the end, because today's topic can completely change how you approach Forex trading and manage risk. Forex trading attracts millions of people in the UAE, yet most beginners lose money instead of making profits due to common mistakes and lack of preparation. The reason is not that Forex doesn't work, but that most people trade without the right knowledge, proper structure, and disciplined mindset. In this video, you will learn how beginners in the UAE can approach Forex trading in a more professional way and aim for consistent, sustainable profits. This is not a get-rich-quick guide, but a realistic and practical roadmap designed to help you trade responsibly and avoid costly errors. Before we go deeper, take 1 second to like this video, subscribe to Freema Synergy, and turn on notifications so you don't miss future content. This action helps the channel grow and allows us to keep sharing high-quality, practical, and educational content focused on real knowledge and real results. By the end of this video, you'll clearly understand what Forex trading really is and how beginners should approach it in a smart and responsible way. Let's now start from the foundation and build your understanding step by step so everything is clear, easy to follow, and built on a strong, reliable base. Forex trading, or foreign exchange trading, is the practice of buying and selling currencies to generate profit from fluctuations in their exchange rates. Currencies are always traded in pairs, such as USD-AED, because when you buy one currency, you are simultaneously selling the other. The price of a currency pair moves due to factors like interest rates, inflation, economic news, political stability, and global trade activities. Forex is the largest and most active financial market in the world, operating 24 hours a day, 5 days a week, across major financial centers. Because of its high liquidity, traders are able to enter and exit positions quickly, often without experiencing major price fluctuations. However, despite its opportunities, Forex involves risk and requires proper analysis, risk management, and trading discipline. With the right education and practice, Forex trading can become a valuable skill for participating in the global financial system. Now that you understand the basics, let's talk specifically about why Forex trading is so popular in the UAE. United Arab Emirates is a global financial hub that provides access to international markets, modern trading platforms, and advanced financial infrastructure. There is no personal income tax on trading profits, which makes Forex trading especially attractive for individuals looking to maximize their returns. UAE also offers access to many regulated brokers supported by strong financial oversight, which helps protect traders and ensure fair market practices. This combination creates an ideal environment for traders, particularly beginners seeking transparency, security, and strong regulation. However, before you open a trading account, you must understand an important truth about Forex trading and how it really works. Forex trading is not easy money, and when done correctly, it is not gambling, but a structured activity based on analysis, planning, and risk management. Most beginners lose money because they trade emotionally, chase quick results, and enter the market without a clear, well-defined trading plan. Consistency in Forex does not come from luck, but from discipline, proper risk control, continuous learning, and following a proven strategy. Once you accept this reality and adjust your mindset accordingly, your chances of long-term success increase significantly. Let's now answer one of the most common beginner questions. How much money do you actually need to start Forex trading in the UAE? Many beginners believe they need a large amount of money to start trading Forex, which often discourages them from getting started. In reality, you can begin trading with a small amount of capital, but your expectations must be realistic and focused on learning rather than profits. Low capital should be used primarily as a learning tool to build experience and discipline, not for aggressive profit targets. The main focus at the beginning should be skill development, risk control, and consistency, not fast or unrealistic returns. Once you decide to start, the next critical step is choosing the right Forex broker in the UAE, ensuring it is regulated, reliable, and suitable for beginners. A broker is your gateway to the Forex market, offering the tools and access to trade, which makes choosing the right one extremely important. Always trade with regulated brokers that operate legally in the United Arab Emirates, as regulation helps ensure fair practices and protection for traders. Avoid brokers that promise guaranteed profits or unrealistic bonuses, and focus instead on transparency and regulation. Security of funds, transparency in fees and execution, and responsive customer support should be your top priorities when selecting a Forex broker. With the right broker in place, the next step is understanding how to analyze the Forex market using structured and reliable methods. Forex traders use technical analysis to study price charts, trends, and patterns in order to identify potential entry and exit points. Fundamental analysis focuses on economic news, interest rates, inflation data, and major global events that influence currency movements. Beginners should learn the basics of both approaches instead of relying blindly on signals or tips from others. Knowledge gives you control and confidence in your decisions, while guessing and emotional trading often lead to losses. Even the best strategy will fail without proper risk management, which is the backbone of consistent profits. Risk management means protecting your trading capital at all times, regardless of market conditions or confidence levels. Professional traders never risk a large portion of their account on a single trade, no matter how strong a setup may appear. Using stop-loss orders and proper position sizing is non-negotiable for maintaining long-term consistency and control. Survival in the market always comes before profits, because staying in the game is the key to long-term success. Now let's talk about something every beginner looks for: a trading strategy that fits a disciplined and realistic approach. A trading strategy is a clear and well-defined set of rules that guides when to enter and exit trades based on specific conditions. Beginners should focus on simple strategies that are easy to understand and apply, rather than complex systems that create confusion. Consistency in trading comes from following the same rules repeatedly and trusting the process over time. Changing strategies too often prevents proper learning and usually leads to confusion, inconsistency, and unnecessary losses. Even with a good strategy, many traders fail because they ignore trading psychology. Fear and greed are the biggest enemies of Forex traders. Emotional trading leads to impulsive decisions, broken trading rules, and unnecessary losses that could have been avoided with discipline. Emotional trading leads to impulsive decisions, broken trading rules, and unnecessary losses that could have been avoided with discipline. Successful traders learn to stay calm and objective, controlling emotions like fear and greed even during volatile market conditions. Your mindset plays a critical role in trading and ultimately determines your long-term results more than short-term wins or losses. Before risking real money, every beginner must spend time practicing properly to understand how the market works. All beginners must first start with demo accounts, which allow you to practice trading without risking real money while building experience. This is where you test strategies, understand platform tools, and learn how the market behaves in different conditions. Skipping this step is one of the biggest mistakes beginners make, often leading to avoidable losses later. Consistent practice builds confidence, discipline, and better decision-making, helping you avoid costly mistakes when trading live. Let's now look at the most common mistakes beginners make in Forex trading so you can trade more safely. Overtrading is one of the fastest ways to lose money, as it often leads to emotional decisions and poor trade quality. Following unverified signals and social media hype is extremely dangerous, especially for beginners who lack experience. Ignoring proper risk management almost always leads to account blowups and unnecessary losses that could have been easily avoided. Being aware of these common mistakes early can save you years of losses and frustration that many beginners go through. So how do beginners actually move from losses to consistent profits while managing risk and staying disciplined? Consistency comes from achieving small wins repeatedly over a long period of time, rather than chasing big profits. Professional traders focus on percentages and risk management, not on the amount of money made or lost on a single trade. Losses are a natural part of the trading process and must be accepted as learning opportunities, not failures, if you want to improve. Discipline is what turns trading into a structured business based on rules and consistency, not a gamble driven by emotion. To succeed in Forex, beginners must adopt a long-term perspective and focus on gradual improvement rather than quick results. Forex trading is a skill that develops over time through experience, practice, and discipline, and it should never be treated as a quick replacement for regular income. Continuous learning, self-review, and long-term commitment are essential because consistency and patience build a real market edge. Before we wrap up, here is the most important advice every beginner should remember if they want to trade responsibly and consistently. Start slow, stay disciplined, and always protect your trading capital, because capital preservation is the foundation of long-term success. Focus on learning and building skills before focusing on earning money, as knowledge and experience come first. Avoid comparing your trading journey with others, since everyone progresses at a different pace and under different conditions. Consistency, patience, and discipline will always outperform shortcuts and quick win strategies in the long run. If this video helped you understand Forex trading better, like it and share it with someone in the UAE who is just starting out. Subscribe to Freema Synergy for more investing and smart money content, and comment Forex or trading if you want a beginner Forex strategy video next. Until next time, trade smart, stay disciplined, and keep building your future. Thank you for watching, and see you in the next video.